Good morning friends, welcome to Sharekhan pre-market view. Indian markets had a fabulous session yesterday with Nifty gaining over 75 points and Sensex putting on over 250 points gain. This was ahead of the RBI policy. We saw broad-based buying, however healthcare indices saw tremendous gains with stocks having a fabulous run-up. Back in the US market, the cues from global markets continues to be positive. Yesterday Dow put on over 117 point gain. S&P was up by about close to 14 points and Nasdaq had a 30 point gain. This was after a good set of data which was in line with expectation, showing that the economy, the largest economy in the world, is holding on. Also, the comments from Fed official continue to raise optimism that the interest rate hike in the world's largest economy is going to take some time and is going to happen at a slower pace. Taking cues from the US market, most of the Asian markets are up. Most of the indices are up by between 1 percentage points to 75 basis points today. Also, SGX is indicating a positive opening by about 35 points ahead of the RBI policy in India today. If you look at the flows continues to be robust from FIs in the cash market. They were buyers of about 937 crores in the cash market. They were sellers of index future by 753 crores, whereas DIIs were sellers in the cash market by about 170 crores. Now, after this gap-up opening, whether Nifty is likely to scale to higher zone or whether it will face resistance ahead of the RBI policy, let's have a view from our derivatives team.
Good morning friends, we'll give an analysis on derivatives. In yesterday's market, we have seen Nifty opening despite mixed cues from the international markets, and after a long weekend, we have seen Nifty opening up with a positive bias. And till the mid trade, we have seen Nifty hovering, Nifty trading in a narrow band of around 15-20 odd points and oscillating between negative and positive territory, finding out the immediate trend in the market for the yesterday's trading session. But however, post lunch, we have seen Nifty inching higher and breaking intraday highs, and finally it closed higher of around 0.5% at 8689.80, just below 8,700 odd levels. Now, in the open interest terms, we have seen a reduction of around 2 odd percentage, that is 3.6 lakh shares were reduced in open interest, indicating some kind of short covering was observed by market participants in yesterday's trade. However, the cost of carry have decreased from 6.5% to 5.5%, indicating some short build-up was also observed at the higher levels as due to the event which is lined up today of RBI policy. The Nifty premium have came down significantly from around 43 odd points to 28 points currently. However, the put call ratio have inched higher in line with market going up. We have seen put call ratio have also inched higher. That is, it have inched 2 basis point higher to 0.98 levels from 0.96 levels. Now, the volatility index has reached an high of around, has seen a sharp upside of around 10 odd percentage during the trade in yesterday's trade. But however, it settled with around 6 odd percentage higher at 14.57 levels due to the event which is there in today's trade. We have seen volatility index inching up higher. On the options activity, 8,800 and 8,900 call option was quite active. 8,800 has seen 20% build up in open interest. However, 8,900 call option has seen build up of around 50 odd percentage. However, 9,000 call option remains as the highest in terms of open interest. Now, seeing the volatility index inching higher, it's difficult to judge that both this strike price has seen a short build-up. Majority of the build-up is on the longer side, both in call and put options, where people have taken both the position and initiated straddle strangle kind of strategy ahead of the today's event. While in put option, we have seen 8,600 was quite active, has seen a build-up of around 31 odd percentage, while 8,500 put option has seen minor addition of 3 odd percentage. However, in put option 8,400 remains as the highest in terms of open interest for this series. There is one securities in bank period for today's trade, that is Century Textile. On FIS terms in index futures, there were net sellers of 752 odd crores. Now, despite in the last couple of trading sessions on the Wednesday's trade and also in yesterday's trade, market have Nifty have gone up around 150 to 200 odd points, but we have not seen meaningful long build up or meaningful buying by FIs in index futures, which is a bit worrisome in the trading session to come. However, in index options, there were net buyers of 1,001 odd crores, and we have also observed that most of their activity has been shifted to index options. indicating good amount of volatility which can be seen in coming trading sessions. While in stock futures, there were net buyers of 486 odd crores, and stock options there were net buyers of 51 odd crores only. 5 days VWAP stands at 8570 with a lower range at 8570 and higher range at 8737. Remember friends, 8737 is the higher straddle break-even point for this current month, and a break above 8737 and a close above 8737 can see a further 100-150 points upside for our market. So in today's trade, 8737 should be watched quite closely. While SGX Nifty is trading positive by around 30 odd points and it's trading at 8723.50. We have suggested a long call butterfly for the today's event, hence the market participants can initiate this strategy. That concludes from derivatives. Thank you.
Friends, let's look at the trading ideas for the day. The first one being Pantaloon Fashion. Now, in a first indication of a mega restructuring plan for its retail companies, Aditya Birla Group has proposed merger of Madura Garments, MGL Retail undertaking and Aditya Birla Retail with listed Pantaloon Fashion and Retail in a share swap deal. Now this is positive news for Pantaloon Fashion, and we can long it with stop loss of 109 for potential upside of 118. Our next idea is GMR Infra. Yesterday, a consortium of companies led by GMR Infrastructure has backed the much awaited 5,080 crore contract from the Dedicated Freight Corridor Corporation of India to design and construct a 417 km stretch of the project's eastern arm. Now one can long GMR with stop loss of 16 rupees 10 paise for potential upside of 18. Moving on to the news section, today we have RBI's bi-monthly monetary policy. Overall Bloomberg consensus expectation is that there would be status quo. However, certain market participants are building in a case for easing of CRR, which will help in better transmission of rates by banks. CRISIL has assigned a negative outlook on the real estate major DLF Limited long-term loan and debt instrument on account of significantly higher debt level, weak operating performance. Overall, this news is negative for DLF. Also, Center has said that it will divest close to 5% stake in REC through OFS route on Wednesday. At the current market rate, the divestment will help government garner close to 1,600 crore rupees. Kane India has sued the government over 20,500 crore tax demand. The company argues that the tax proceeding initiated after more than 6 years. Auto component major Bosch has declared a lockout at its Jaipur plant due to the ongoing worker unrest. Also, government is likely to extend the subsidy of naphtha-based urea manufacturer beyond April 16. Now, this is extremely positive news for certain companies like Speak and Madras Fertilizer and Mangalore Chemicals. IGSEC Heavy Engineering is forming a JV with MEC Foster Wheel North America Corporation. In this JV, IGSEC will hold close to 51% stake, and overall this JV seems to be positive for the company. Bale's net profit plunges 62% to 1,314 crore in FY15. Total turnover also shows a decline to 30,806 crore from over 40,338 crore last year. However, the overall order inflow was extremely positive. Moil slashes manganese ore price by up to 25% for the April to June quarter. This is negative sentiment, negative news for the company. Now moving on to the watch list for the day, stocks with positive bias, we have Hindustan Unilever, Dr. Reddy, Hindalco, and stocks with negative bias, we have Sun TV, Reliance Infra and Eicher Motor. Moving on to stocks for investment, we have L&T, Aditya Birla, Nuvo, Maruti, Ultratech Cement and Lupin. That's all we have in today's session. Thank you.